Hello viewers, we'll be going over Gold Miners Jr. ETF ticker symbol GDXJ. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, and the day-by-day forecast for Gold Miners Jr. So back to the technical analysis. Today we're up 3.3% on the 1 hour chart. We are now approaching to positive MACD on the 1 hour chart. As for the 4 hour chart, we were approaching to negative MACD. However, we saw a convergence in play overnight due to today's nice reversal, but the volume is still quite low compared to previous days. So if we expand out further to the daily chart, we start to see a divergence in play on the daily MACD, and there's not much strength on hand. However, the uptrend is still intact, so we may encounter sideways price action. So the next support that I will see will be slightly below the 18-day moving average, this purple line. This will be our immediate support, which is around the price of $41.10. And as for resistance, if we do manage to reverse and head up higher, we made a previous resistance back in February 24th around the price of $46.31. And if we were to move up higher, that price movement is roughly around, I would say, 7.3%. And to the downside, it is around 4.5% to the downside to hit next support, or the 18-day moving average. So let's examine the day-by-day probability model. Again, these models are now available in the link below. So at the moment, with this model, we only have a small sample size. Do take that in consideration. So there's not much significance in this model at the moment. So if we were to progress to the 7th day, we have a 100% chance for gold miners to climb higher between 0 to, say, 3% higher. Again, this is a small model. We only have one model this week, so keep it in mind. So let's head to the day-by-day forecast for GDXJ. So we have 1 day out, which will be a Wednesday, 2 days out will be Thursday, and 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So at the moment, let's examine how we found the models. We use a line graph, and that happens to be the best match. So what we have here is the current trend, and below is a trend that I believe is the best match, and this trend dates back to January 27, 2016 to March 10, 2016. So let's compare the two charts. So on the current trend, we start off at the middle Bollinger Band, and then we proceeded to average above the middle Bollinger Band throughout the entire several weeks. And we see that trend here as well. We start off at the middle Bollinger Band and average above the middle Bollinger Band for several weeks. So since the two patterns are the same, there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was, again, January 27th to March 10th, 2016. Back then, gold miners was up around 1.1%. So slightly to the upside. Again, that hits the standard deviation of here between 0 to 2.8% in the next coming days. So let's examine the technical performance of each model. On the current trend that we're in, we're down 63 basis points from a monthly high, up 35% from a monthly low, up 2.3% from 10 simple moving average, and up 5.8% from 20 simple moving average. We don't have 50-day moving average. Reason why, we're only examining 30 days of trend. And on here, where the trend that we just examined, it was down roughly around 1.3% from a monthly high, up 33% from monthly low, up 5% from 10 simple moving average, and up 9% from 20 simple moving average. There are slight technical similarities among the two trends. Again, these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.